are you confident that the Chinese lessors will not squeeze you or other rivals out?
Look, over the last 4 years, Aercap has become the biggest, most profitable lessor in the world. We're the biggest owners of commercial aircraft in the world, the biggest buyer of commercial airplanes in the world. And we did that competing with the rise of all the Chinese lessors and others. Now, how did we do it? That's the key difference. In the world of low yields for the last 4 years, banks have been looking for yield. How can I get into an industry? And a way into the aircraft leasing business that's relatively painless at the start, but can cause pain at the end, is what we call a sale-leaseback, where an airline buys an airplane from Boeing or Airbus and then puts it out to sell to a lessor and lease it back for a period of time. So that's an easy enough trade to start off with for a bank. Say, for example, a lot of Chinese banks have set up leasing companies to do just that. It doesn't take any real knowledge of the asset to do that. It's just a price. Don't understand value, but you get price. It's like, as one of my countrymen said, a cynic is someone who knows the price of everything but the value of nothing. So people can get into the thing pretty quickly, but the real problems arise later on. They do it without a platform, they do it without global presence, and what we're starting to see is a few of them are starting to really struggle now with when the airplane comes back. How do they move it? How do they refurbish the engines? How do they refurbish the interior of the asset?
So what you're saying is, despite the fact that Chinese lessors are willing to take a cut in the margins and profitability, that is not sustainable going forward, and hence you maintain your position.
Correct, and we've done that over the last 4 years. We've seen this before. It was the same in the 1990s when a large number of Japanese entities came into the business and were just looking for near-term yield, but they found that there's an awful lot more to this business than spread. The same happened to Morgan Stanley when they entered the business. They bought a leasing business. 5 German banks did it as well in the past. So what we're seeing is nothing unusual. We see banks coming into an industry when spreads are very low. As soon as spreads widen, historically, they've run for the hills.
So, Aengus, in this space, we're seeing a lot of M&As. Do you expect consolidation to continue?
Slowly, I do. The thing about it is, M&A is really hard to do. We've done a lot of it, and we've a consistent history. When we buy a business we understand, we do very well. But every time we buy a business we don't understand, we've done very badly. So we're going to try and do the former, not the latter. But the reason about M&A in this space is, you've got to be careful about it, is the owners of these businesses, they know these businesses produce very stable, steady returns. So the most successful business GE ever set up was GCAS in the GE Capital business. 25 years of uninterrupted profits. CIT was the same. AIG had a successful business in this industry too, but unless there's stress at the parent, you're not going to see a huge amount of selling of businesses. There'll be lots of talk, there'll be lots of bankers trying to generate activity, but unless the owner, the parent, is under stress, I don't think we're going to see that much in the way of M&A. Lots of discussion, but because the owners know these are good businesses and they don't want to sell them unless they're under real pressure.
The question is, are you interested? Are you looking for more acquisitions?
Look, we've got our shareholders' money every day. We've got to look at what to do. Do we buy another company? Do we buy our own shares in the market? Or do we buy airplanes from Boeing and Airbus? They're the 3 things we can do and pay down debt. Now look, so we do all of them. We've done more M&A than anyone in the industry has ever done. So if we saw the right transaction, of course we're going to look at it. But the crucial point is, we can never lose our discipline. It's our shareholders' money that we're controlling, and we have to be very careful stewards of that money. So if the right transaction isn't there, and we looked at all the ones that we didn't close on, we looked at them all, we didn't feel they were right for us. But if the right one is there, sure, of course we're going to look at it. We have that responsibility to our shareholders.
I want to take a look at your customer list, because when you take a look at it, you see Hainan Air, Yunnan Lucky. Are you concerned, given developments with the 2 airlines?
Look, we're working very closely with the Hainan Group, of course, at the moment. Now, the key thing, if you look at the Hainan airline business, is these airlines are actually making significant cash. The issue around the Hainan Airlines is not the airlines themselves. They are viable business models. So we're willing to work with those airlines because we know that there's a viable business in those businesses.
But are you looking to protect your exposure?
Well, of course we are. Like any customer, we're always looking at what's our exposure, how do we manage it, and if we believe an airline has a viable business model, we'll always work with that airline. And what we've seen more often than not in the past is where there's a viable business model, the airline comes through it. The key decision for us, if we took the decision we didn't think was a viable business model, like we didn't with many airlines over the last few years, we'll take the airplanes out. But with the Hainan Airlines at the moment, we see a viable business model for them.